This is GBP card. I just want to do a top-down analysis on a directional bias on GBP card to see the market overflow. So currently looking at this page now, you discover that this page is actually bullish. Meaning looking at this page, you see that this page is bullish. So, and if this is your first time of watching my YouTube channel, I'm Daniel Ago. What we basically do here is to analyze the financial market, to analyze gold, forex pairs, and indices. So I discovered that there's a good and nice setup on GPK. So I just want to do a little top-down analysis and the directional bias, so we know exactly where the market is actually going. So basically looking at this pairs, what you discover now, you discover that the pairs overall flow is bullish. So before you start or before you do a top down, you need to go to the higher time frame, maybe the weekly time frame, daily time frame, and the 4-hour time frame. Currently now I'm on the weekly time frame. So the weekly time frame, you can see is bullish already. So, and since you've discovered that the pairs is bullish, then you have to scale down to the daily time frame to see the movement, the direction of the market. So basically looking at the daily time frame, you discover that market is breaking structure. And what is the break of structure? Break of structure simply means, you can call it BOS. It's when the market has taken the upper high, and maybe if the market is bullish, it's taking the higher high and the lower low. It's giving you higher high, lower low, higher high, lower low. And when you're looking at this, you see this is actually a shifting structure here. After the shifting structure, what you see, the next thing here is a break of structure. It breaks the structure to this place. So you first see a shift in structure before a break of structure. But mind you, break of structure and shift in structure are not the same. So you first see a shift in structure. Shift in structure is to tell you that the market is bullish or the market is bearish. Is to give you the direction of the market, where the market is actually going. Why break of structure is a continuation, like is to confirm, you have to confirm if truly the market is bullish or bearish. So market needs to be breaking structure to give you a confirmation that I'm bullish or I'm no longer bearish. So that's how it works. So now currently I'm on daily time frame. So what you do on daily time frame is to mark out the valid zones. And so on these zones now, after the shift in structure, you discover that there's something here. I will still go down to the lower time frame. This is actually another block. Another block is actually a red candle before a bullish move, or a green candle before a bearish move. So once you mark out the other block, the next thing you're going to do is to mark out the liquidity. Where are the liquidity? This is actually a liquidity. Sorry, this is a liquidity. So you mark out the liquidity there. This is liquidity. Then after the liquidity, you've already marked your zone already, which is the POI. This is my POI. I mark this POI because I've seen a shift in structure and a break of structure and the liquidity below it. So this zone is a value zone. So once you've done this, the next thing you're going to do is to scale down to the lower time frame. So you can, you go to the 4 hour is actually not a lower time frame, but you go to the 4-hour time frame so you can clearly see what you're analyzing. So currently now I'm on 4-hour time frame already. So on the 4-hour time frame now, you can basically see that the market taps on the POI, on my POI, and after tapping on that POI, it shifted structure. That's to give you a confirmation, giving you a confirmation that the market is actually bullish. So you can see a shift in structure already clearly. Shift in structure here, telling you that the market is bullish. Once again, shift the structure on your POI, and after seeing that shift in structure, what next? So after seeing your shift in structure, what is the next step? So you look for a valid zone, look for an order block that is unmitigated, But what will make that other block to be valid, you have to look for a liquidity. This is actually my liquidity, or you call it an inducement. So I'm expecting this liquidity to be out, then I'll be targeting the other block. So what will you do? You draw your this thing from here. Sorry, it's like you draw this from here, draw it up. So this way I'm targeting this high. Targeting this high, and sorry. So I just want to remove this. So okay, let me just go back. I'm targeting this high. This is my targeted high, and you can see shift structure has occurred already. Shift structure has occurred already, and these are inducements. Then the POI is here already. These are POI. Then this is my TP and my SL set already. So what makes this thing to be valid is the shift structure. After the shift structure, the inducement and the POI. Your POI can be breaker block or other block. So any one of the above, anyone you see there, you take it. Maybe if it is other block and it's unmitigated, you can take it, or breaker block unmitigated, you can also take it. So we are currently on 4-hour time frame. You can also scale down to the 1-hour time frame, because the more you scale down, the more you clearly see the movement of the market. So this is 1-hour time frame. So on the 1-hour time frame, this is my inducement. The other block I told you earlier. This is the other block I told you earlier. This is the other block. This other block. You mark it very well, so you know what you are doing. It's not what they just tell you. You just go. You have to mark it to know what exactly you are doing. That's one thing about this. That's the reason why 99% of people, 10% of traders fails. It's because you just hear one or two information. You will not go and back test. You will not go to the chart and confirm if that thing is truth or not. You just take it like that. So you have to back test. You have to be very disciplined. Whatever they tell you, don't just go and start blowing your money there. You have to go to the chart, back test, and confirm if the strategy really works. So this is it. This is the other block here. The other block is here. Boom. And the liquidity is here. So this liquidity needs to be taken out before the other block will be valid. So that's my expectation on GBP card. I know this price is volatile, so I'm also doing this analysis. So some others, like if you are watching this video, you can also take advantage of it, because as of now, 2nd of December, that's the time I'm shooting out this video. So if you are watching this video right now, you can also take advantage of this. So you can go to GBP card, then reanalyze the pairs as I did, then look for a valid entry. So look for a valid entry so you can take advantage of it. With this one setup now, you can use this one setup to pass a challenge, or at least face one of your challenge. You can easily go far. Maybe you can, depending on the lot size you use. So that's how it works. So it's very simple. So don't make things complicating. So make things very simple for you, and always back test. Whenever you see any strategy, go back and back test. Confirm if the strategy is really working. Go to the previous setup, the previous setup, and forward test as well to confirm if the strategy really works or not. You can't just start blowing money, risking all your hard-earned money on setup you don't really know how it works. So this my prediction on this press. So please, if you find this useful, don't forget to subscribe. Let's go together, bro. Let's go together. Then I will bringing out more video like this. Bringing out more video like this. Thank you so much. Subscribe, like this video, turn on